inside the current corrective phase market.
Okay. Thank you very much for joining in. Let's talk a bit about the February mutual fund data. Swaroop Mohanty, Chief Executive Officer, Mirae Asset Investment Managers, is with us on the show. Swaroop, want you to react to two data points. One, the net equity inflow has seen a pickup in the month of February, 15,657, which compares with 12,500 approximately month on month. And the other one is the total assets under management, which has fallen from 39.6 lakh crore in January to 30.5 lakh crore. So it's a sharp decline in the total assets under management. Can you talk a bit about what led to these two data points?
I think the first one I'll talk about is it's so heartening to see, right? Today you call so many experts to the show and you showcase so many people who surround the stock market. But today the actual hero of the stock market, and especially Indian market, lies in the hands of that individual investor who's going on pumping in the SIP number, which is keeping the market intact. And when you see that number going up, you are seeing the beginning of probably the equity culture seeping deeper into the country, and people understanding that volatility is the best friend of the investor through the SIP route, and hence continue to plug in their SIPs month on month. It's a fantastic sight to see, and it's good to see that people realize the power of the asset class. And it's only when you continue to buy in markets like this that your wealth creation opportunities go up, is something which is reflecting in the behavior of investors right now. Mm-hmm. On the second part, I'm not very sure of the data. Let me check back, because I don't think there is anything that will show that kind of a drop in assets in the industry. I'm not very sure of the data that you're referring to. I'll have to check and get back, because that kind of data drop is not possible, if you ask my personal opinion.
Okay, because the total assets under management historically has been around at 40 lakh crore mark.
And I think it's 39.46 lakh crore.
Okay,
so I think it's just about flattish on a month-on-month basis.
I think the first flash went wrong. There was an error there. So it's flat, right?
It's flat on a month-on-month basis. Swaroop, 9-month high for equity inflows. You've been talking about this whole equity cult. This is despite a lot of disruptions which probably took place in the market, when it came to the Fed indicating that they're going to hike for longer, as well as the Adani Group fiasco which has taken place. If you could just give us a sense in terms of what you expect going forward in terms of net equity inflows, because we're talking about 9-month highs in the month of Feb, where there was volatility in the markets. What is the trajectory that we could expect?
I think we have to really relook everything now. I mean, the whole market sort of predicted that market figures will be terrible this month, but the data which has come out is very contrary to people's belief, and that's where something is a realization of the last 2-3 years, especially post-COVID, that the way people view investing is dramatically changed. Two things: one, of course, COVID has given people a different outlook towards investing, and second, obviously the demography of the country beginning to play out. And when you see the young of India, they're economically very different, and from an information perspective are different. So their risk-taking ability and their approach to investing could become very different, is something we are beginning to see. And when you look at this particular month figure, because it's going to be very significant, and it's something which will probably pull the market for the rest of the year, is that as data points remain weak, that's something which the investor cannot do anything about, because that's a factor of the market. What the investor can do is take control of his or her behavior and the approach to investing, and that's coming out to play. And if they continue doing that, a lot can happen to their overall wealth creation journey, and that's on display right now. So a lot of credit to the investor, a lot of credit to the advisory community and the distribution community to keeping investor not only intact, but showing them the value of the long-term story of India, which is intact and it's looking pretty good post-COVID.
Okay. Swaroop, wanted to get your thoughts on a story that our colleague Santosh Nair, a money control broke, and this is what he learned from sources, is that SEBI is proposing that mutual funds need to own their broking or foot the broking expenses. So mutual funds should get membership on stock exchanges and do their trades via their own terminals instead of giving it to an outside brokerage and then, getting the clients and the customers and, get them to pay for that brokerage. Your thoughts on this story? Right now, at least, it's in very early stages. It's only in discussion stages. But if that is to play out, if mutual funds indeed have to do their own broking or foot their broking expenses, how does it change and what are the implications?
I mean, it won't be right for me to talk. I would rather, if that story does play out, that will be in the anvil of AMFI to speak on this part. But see, when our relationship with broking community is very symbiotic. I mean, it works both ways. While the trades go in from our side, there's a fair amount of research which comes from that side. So it's a relationship which works both ways, and one needs to get a little deeper into this story before I start commenting. I'm happy that you say it's too early, so let the story play out, and probably AMFI will be the right place to speak about this rather than me on an individual capacity is
Okay.
very frank confession.
Okay, Swaroop, just getting back to the data, I just wanted to touch upon one particular piece of information or statistic. Large cap fund inflows have reduced quite significantly, 354 crores versus 716 crores. And small cap flows have been steady, which has been above 2,200 crores for the third straight month. And mid cap funds also were at 1,816 crores, and they've been tracking at these levels at least for the past 3 odd months. What is that telling you? That mid caps and small caps are continuing to see that maintained interest, whereas large caps saw downtick.
This is as per the expectation of the narrative around the market. As the returns and the alpha factor sort of diminish, people start hunting returns at the lower market caps. And that is what is evident over the last 6-8 months, as you rightly pointed out. There has been a surge towards the mid and smaller cap side of the market. And that is how market cap investing sort of unfolds as the markets become more transparent and become mature. The hunt for returns then graduates towards the smaller caps. But here's my thing, while people might write off the large cap at this moment, but whenever we are talking about investing in large caps, the other option to large cap becomes the Nifty 50. From a Nifty 50 perspective, one has to keep in mind that today's Nifty 50 is 37% financials, and if you add IT to it, it's almost 40-45% in two sectors. Are people cognizant of the fact that any large cap portfolio will be far more diversified, and hence the risk-adjusted profile of that portfolio might be very, very different from the present Nifty 50 at this moment. And there is this broad thinking that alpha and return generation of large cap is on the diminish or on the lower end. We contradict that post-COVID because we believe that there is a lot of value in the larger companies, and especially post-COVID, the larger companies can become larger. It is an advantage, larger balance sheets. But the narrative is not exactly wrong. So some people who push for returns will push for mid and small cap, and that is what is playing out that at this moment. My humble request to everybody doing that is also sort of look at the risks that one is piling on by shifting portfolios there. If one is comfortable with that risk, not an issue at all. If one is doing that in cognizance of the risk, not an issue at all.
And what is your read of the ETF inflow in the month of February at 29 crores versus an outflow of 1,700 crore in the prior month?
I think, the ETF business is more transactional at this moment. It will become buy and hold over a period of time. So in volatile markets, what we are seeing is quite natural. There'll be a fair amount of trading is announced, and that's a factor of that way of investing at this moment. It has to graduate more. You are seeing a lot of money on the index side. That is the target maturity funds playing out. But I'm not surprised with the ETF flows as we see it.
Swaroop, we leave it at that. Thank you very much for joining in. So the net equity inflows continue to be very strong, picking up by about 20-25% on a month-on-month basis. And equity inflows into the mutual funds have gone up for the 24th straight month. For 24th straight month, we have seen inflows into the equity mutual funds. This is a very strong data point. We are awaiting the SIP picture, but up until now, the SIP numbers have been very resilient and the trend has only been rising. Get into a break. As we do that, here is a quick programming note. On the 14th of March, CNBC TV 18 will host what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts at 4:30 p.m. on the 14th of March, and you can catch all the live action right here on CNBC TV 18.